Thank you, Chrissy, and it is a mouthful, I know. Look, it's great to be here, and it's a beautiful place you've got up here in southern Queensland, and great venue. So we'll kick into it. We have just made those two acquisitions, and they do mean big things for the business, and I'll try and go through that with you in this presentation. So I'll start with a value proposition slide, just to wet the whistle. 70 million is roughly our market cap right now. We have released a feasibility study for our Cal East project, which we've been working on for a few years now, just outside of Kalgoorlie. That has more cash flow, so it well and truly supports our market cap. We can build a brand new mill outside of Kalgoorlie and produce cash flow. Paulson's operation has remnant mining opportunity, which alone would pay for the acquisition that we've made with Northern Star, and there's a lot of upside there. The Coyote operation, we already have a 5-year mine plan there. We've got a soft start on getting back into production through using stockpiles, which sit there on surface and a low cost to get up and running. And then of course there's heaps of blue sky in our projects, finding another Paulson's, another 1 million ounce system, finding extensions, growing Coyote, and continuing our work at Cal East. So there's a lot of upside and a lot of value in this business that is not currently realised. As Chrissy said, 2 million ounces at 2.5 grams per tonne. Really good land holding. There's 3 key assets. Obviously we've got number 1, Coyote up in the Tanami. 2 is Paulson's in the Pilbara and Ashburton, and of course our existing project, Cal East, outside of Kalgoorlie. 3 excellent locations for obviously making more gold discoveries and for producing. Now we've got a lot of infrastructure in the business. The 2 assets we picked up from Northern Star have mills, have infrastructure, have camps. It's all there and installed, so it's low capital to get it back up and running. There's cash flow sitting there in the study that we've released for Cal East. We just need to build that mill, and it's not a great time to be building mills. Labour markets are pretty terrible out there. And the last point is that the directors have a fairly substantial holding. They've put a lot of their own money into this, and they do intend to make this work. I'll go through each of the different operations and talk about what we're doing and where the value is in those. So Coyote first, this last operated in 2013, produced around 35,000 ounces per annum over a sort of a 6-year period. There's a lot of value here because it does have a camp. It's the only camp in the area. It's the only mill in the Western Tanami. It's a long strike of the likes of the Cali deposits that Newmont have down in the Northern Territory. There's a 300,000 tonne per annum mill here, as I said, and a really good land holding, along with 500,000 ounces to get us going, and it's going to grow quickly. We've got a 5-year plan here to start on, and we're going to drill that, scope it out, and release information on that as we go through this year. So the rigs will be spinning here in the next couple of weeks, targeting in on the open pits and the undergrounds that will feed into that mine plan. So that's what it looks like in a very brief and schematic long section. The light grey areas are the existing resource that sits there. The dark grey areas in amongst that is the historic workings. We've got, in terms of our mine plan, we've got a 2-year open pit on the Speedy deposit, and then there's a 2-year underground at the moment on the Kavanagh, and that doesn't count any of the existing and historic areas, which obviously there's a lot of remnant resource that will come into the mine plan in time. So we're going to be drilling here soon. Obviously the plan is to extend and infill the resources to prove them up. In terms of the regional package, this is excellent ground. There's a lot of other juniors in the area that are all exploring, hunting for the big deposit that's a lookalike of the Cali. Coyote is pretty much that. They were looking for another Cali when they found Coyote. And we've got the right structures, we've got the right strat, and we've already got a lot of high grades on our lease package, which needs follow-up drilling. So we're doing geophysics here at the moment, and we'll be doing a lot more work and releasing information as we go forward. Paulson's, everyone's heard of Paulson's. It's the asset that started Northern Star, took them from an exploration company, gave them the cash flow and allowed them to leverage up and become a big producer like they are now. This operation last produced in 2017. It's got a very consistent production history, 75,000 ounces per annum at a fairly high 7+ gram head grade going through the mill. Really good infrastructure here, so 450,000 tonne per annum milling facility, associated camp and infrastructure, so similar to what we have at Coyote, and it's the only gold milling facility in the Ashburton, so again, strategically important for the area. Here, there's remnant mining opportunity here for sure. We could start producing and get cash flow out of this fairly quickly. However, we want to find another Paulsens or the extension of Paulsens. So our focus in the near term is going to be drilling to make those discoveries. This is what it looks like as a 3D view on the right-hand side. The red areas are either where there's already mining shapes or that need to be mined, or our target areas. You can probably see some numbers, well hopefully you can see some numbers on there. Out in the footwall, there's a lot of mineralisation that has not been ever targeted by mining. So metre at 236, metre at 67, etc., etc. So we'll be focused in on that to see if we can string a lot of those numbers together and look at a mining plan around that, because that hasn't been a focus going forward. They've always chased, the previous operators here have always chased the bigger, thicker loads. The other thing is the offset position. So when Northern Star picked this up, it was offset from the previous owners lost it, and Northern Star picked it up, found it, got back onto it, mined, and it's offset again at the bottom. The offset position has not been identified yet, and that remains a high priority for us. There's also repeat targets, so there's been money spent on the seismic surveys, and that shows that it's the right rock types, the right structures exist in and around the area, and some directly below and not far away. So we'll be drilling those as high priority targets as well to try and find another Paulsens. Again, regionally, it's in the right area. You've got the big regional structures that run down through Mount Olympus, down to Karlawinda, so big multi-million ounce deposits all along here. Any of the splays that come off, you're just looking for the right trap site. We've got plenty of that going on in this dome that we control a lot of. And there's other deposits here in the area. So we've got mining studies to do on those. We've also got follow-up drilling and extensional work to do on those. And then there's a lot of anomalous rock chips throughout the whole package. So Cal East is one of our mills that's sitting in Cal East, refurbed at the moment. What we've done here is, this is where we IPO'd, so 80 square kilometres of land with no resource. 4 years later, it's 1.3 million ounces and about 800 square kilometres, so we've increased our land holdings substantially. This is pre-development, so we've got our study out that shows that there's a 5-year mine plan, mines 300,000 ounces and generates cash flow after building our own mill. At the moment, we're still active here, so we're still drilling. We're doing grade control at Myree. That's going to be ready to get into production, and we're looking for potential for toll milling agreements, because right now, as I said earlier, it's just not the right time. There's not enough labour available around Kalgoorlie to go into construction. So we do have other options to get some cash flow out of this particular project, which is great. Here's a snapshot of the feasibility study. So it's about a 5-year mine plan, 56,000 ounces per annum on average, about $15.10 per ounce, all in sustaining, which is competitive, and I'll show that in a second. We've looked at only about 600,000 of the 1.3 million ounces in our resource base, so there's a lot more work that needs to go into this to find more value and add more mine life. And as I said, we're drilling, so this will continue to grow, and it's on the shelf, ready to go, permitted to build the mill. So when the time's right and the construction environment's right, we'll be able to launch on this. In terms of that 1510, right now that's using current mining rates from contractors. It's competitive with where everyone else is at the moment as well. There's not too many places making a lot more money than that. In terms of the corporate summary, nice picture of core, it's stuck up there. 213 million shares on market. We've got a market cap, as of close yesterday, about 70 million. So as I say, there's a lot of value to be had there. We've got plenty of money in the bank, as we raised for the acquisition, and we've raised enough to do a good chunk of of damage with the drill bit. So that'll be happening over the next 6 months. Top holders have about 50%. Northern Star and Silver Lake are on the register with 4% each, and we've got some big American funds in there as well. The directors hold about 12%. Those directors are Paul Chapman, Les Davis, and you've probably heard their names already today, once or twice. So they're veterans of gold mining industry. We've got Tony Polglaze from Avanco Resources, he's the mill expert, and we've got Philip Crutchfield, who's their legal power, and certainly a good businessman as well. One thing we've always done is be very active. That's led to the resource growth that we've got. So we started with nothing, lots of metres in the ground. Most of our money just goes back into the ground, and we've built up a good resource base. We've now got 2 new assets, haven't been drilled for years, and we're sure we're going to add more value and more resource there. Once we looking for catalysts, if we can get some cash flow in this business, if we can start some operations, be it stockpile reprocessing at Coyote, or if it's toll treating at Myaree, and we can call ourselves a kind of a producer at that point, then maybe we get a re-rate off that. But certainly in terms of how many ounces we've got in the ground, in terms of the current market cap and EV of the company, we are undervalued compared to some of our peers. So what are we planning over the next 6 months? Lots of drilling, which is what I've said we do a lot of. Currently got rigs at Cal East, drilling around Myaree. They'll be drilling at Balagundy next month. We'll be drilling Coyote next month, and maybe even sooner. That will continue through the rest of the year, through at least the field season. It does rain up in Coyote later in the year. Paulsens will kick off around September, so getting an underground rig into that will happen around that point. And then there's lots of other exploration activities. So we've got geophysics happening, there'll be resource upgrades ongoing, and of course we'll be releasing information on our restart studies on these projects. 2 minutes to recap, Chrissy. So we do plan to become a multi-operation gold mining business, let's say that. We are currently drilling high value targets. So, if we do hit Paulsens 2.0, that's going to change the share price dramatically. We do have very good infrastructure, so there's a heap of value in our business now with these mills that are owned and installed, and not many other junior companies have that at their disposal. So we do have options. We've got options. We can start 1, 2 or 3 operations in some sort of sequence, which we'll determine and release publicly over the coming months. So cash flow, that's important, especially for a junior. So we have a couple of different options for getting cash flow next year. Stockpile reprocessing, Myaree toll treatment, just to name 2. And if we needed to, we could probably restart Paulsens at some point. So we have lots of options. We've got a very attractive valuation right now with the resource base that we've got and the infrastructure we've got. And of course, we've got a board and management team that have done this before. So if you'd like more information, please come and see me in the booth, and I'd be happy to disclose this and a bit more in detail about everything we're doing. Thank you very much.